You know Shaletta makes you laugh, but did you know Shaletta Brundage can also make you think and boost your business? Media personality, activist, and comedian Shaletta Brundage founded Shaletta Makes Me Laugh to celebrate and share the best of Black culture. It's a podcasting platform. You can download 10 weekly podcasts hosted by African American subject experts at ShalettaMakesMeLaugh.com or wherever you find your favorite podcasts. ShalettaMakesMeLaugh.com is also a production house, creating broadcast quality commercial content. And Shaletta and her team of storytellers create powerful promotional campaigns to get businesses the brand awareness they're looking for. Some of Minnesota's top businesses trust Shaletta, and you can too. Get out the word about your events and products and get in front of communities of color with ShalettaMakesMeLaugh.com. She's got the power to help your business.
Hello, everyone, and welcome back to another episode of the Financially Fit Podcast. I am your host, Creighton, and as always, I'm excited to be here with you all and to talk about our topic today, which is business taxes. Because we know tax season is just around the corner, I want you to be in a place where you can plan it and not panic. So, I want to take some time and thank those that continue to listen to our show, and hopefully you're getting something fruitful from our conversation that can help you continue to grow your business. And thank you for those that continue to share with other business leaders and I really hope that you all will continue to do so into 2026. It's so surprising that we're almost at the finish line of 2025. It seems like this year has gone really, really fast. And I'm very proud of what we were able to accomplish this year. And hopefully you're looking at your financials and you're seeing some improvement based on maybe some of the things that you're implementing from this podcast. For those that are new, what I'll say is this is the podcast where we really set a foundation, because at the end of the day, it's a marathon, not a sprint. If you're looking for a quick fix, this is likely not the place. Like, we want to be methodical about how we're approaching um, our business and really implementing things that are going to help drive us forward. So, with that being said, let's hop in. And I think this is a very important topic because uh, a lot of, from a business perspective, you can be profitable and have cash flow and still be blindsided by taxes. And I see this every day in working with entrepreneurs and founders. Taxes and planning for taxes for a lot of entrepreneurs aren't things that they see that drive the business forward, but they certainly are things that can harm and stunt the growth of your business if not planned correctly. So today we're talking about tax fitness and how to prepare, plan, and keep more of what you earn. So really there's a few steps that I want to go through with you all and things that you should be thinking about as you're approaching the tax season. And there's some rules that I like to apply to this. So I think the first fitness rule that I have is taxes are not a surprise unless you treat them like one. So most business owners, um, they don't get hit by taxes. The reality is that they were never prepared for them. And this is where you've probably heard on prior episodes where I've said there's three business professionals that you really need in your life as a business owner. You need a good CPA, you need a good attorney, and you need a good accountant. And I think the accountant is the person that's your steady, that keeps your books clean, so you're not scrambling at the end of the year. The CPA is the person that's helping you be more strategic, whether that's helping you with a projection, or maybe that's helping you with planning for your taxes, like we're talking about today. And then obviously attorney is helping you help with everything from a legality standpoint, right? Making sure that our operating agreements are in order, or our incorporation agreements are in order, right? Or maybe even our employee agreements, right? Just making sure that we're protecting the business to the best of our ability. So, in that first rule, I think the important core fundamental that we need to understand is being proactive versus reactive. A lot of founders and entrepreneurs, small business owners, are very reactive to tax planning. And I tell you this because I spent, 6 years of my early career in tax working with small business owners, working with people that own partnerships or owned S corps, right? And what I saw was, you know, how planful some of those business owners were in the CPA firm that I worked at, and how that helped drive their strategy for the next year, right? And I think that's important for you all to really take a look at where you've been in your tax planning uh, drive, and like where do you see maybe some efficiencies that you can gain, or things that you wish you would have done differently that could have maybe changed the outcome that you received. So, at the end of the day, the tax burn, when tax season feels like a financial injury, that means that it's time to make some changes. So, I just want us to be very cautious of like rule number one, step number one is like taxes aren't a surprise unless you treat them like one. So hopefully you take from this podcast and you say, hey, this year I'm going to find me a CPA. This year I'm going to find a firm to work with. Or maybe this year I'm going to find an individual CPA to work with because I'm not quite ready for a firm to work with. And then I guess that segues us into our second rule. You need to understand and know your tax type, and understand what you actually owe. So understanding what income tax is, understanding what self-employment tax is, understand what payroll tax is, and sales tax and property tax. And if you're a nonprofit, maybe you have some UBIT tax, which is the unrelated business income tax. You know, uh, if you understand the methodology around these things, or at least have someone in your corner that can help explain them to you, this is what will help you eliminate a lot of those surprises. So, um, I encourage you just to start somewhere, right? You don't need to know it all today. And quite frankly, you really don't need to master it all at all. What you do need to have is someone in your corner who can help you think through these things. I think oftentimes we, as business owners, whether it's pride, fear, or somewhere in between, like we want to feel like we know it all. And the reality is, like, we never will know it all. And that's why we hire people that have these specific expertise that can help us navigate these different priorities and obligations that we have as a business owner. So that leads me into step three, or what I should say, rule three. Um, the rule three is the 30% rule. So, the 30% rule is a simple way to always be prepared. So, what the 30% rule says is we should set aside 25 to 30% of profit for taxes automatically. And what that means is like we should probably automate that and transfer monthly, um, you know, that percentage of our profits into a tax account. This is a separate account from your operating account, likely still connected to the same bank, but it's a way for us to see and have that money set aside and know, like, this is money that we're not touching, right? This is money that we're setting aside proactively to make sure that we can fulfill any obligations that we might have. So, you know, oftentimes people ask me, like, why is it called financially fit? And the reality is that I talk about how this is a marathon, not a sprint. Well, just like when you go to the gym and you want to get fit, right? And we know that that doesn't happen over weeks. It happens over months, maybe even over years, right? And the same happens, in your business, right? We want to help you become fit, and that's the whole thesis around this podcast is we want to be able to provide you with the knowledge, the ideologies that can help you continue to grow your business, and also be mitigate any risks that may come in your business by having some of the foundational steps to mitigate those things. So that leads me to our fourth rule. Um, you can strengthen your business with strategic deductions. So maybe you're a sole proprietor, right? And maybe you have a home office, right? Your home office is likely deductible. Maybe you're traveling using your car to travel to client meetings or to travel and deliver whatever services or products you have, right? You can deduct your vehicle and mileage, right? At least a certain percent of that based on how much was used for business. Maybe you are investing in equipment, tech, and software for your business. All of those things are deductible. You're paying contractors, maybe and benefits. Maybe you're traveling to conferences and doing some professional development. The reality is, if it helps you run your business and grow your business or protect your business, it's likely deductible. And that's where that CPA or whether individual or firm comes into play, because they can help you understand what are the things that I can be deducting throughout the year in preparation for taxes. So there's lots of different ways for us to strategically position ourselves to alleviate taxes legally, and a CPA or firm can truly help you with that. So number 5, and this goes back to the core of a lot of the things I've talked about. And number 5 is when to bring in a CPA or fractional CFO. Um, I always say that timing is everything, and uh, you may not need a CFO today. Maybe you just need a bookkeeper. Maybe you have a bookkeeper and maybe you need a controller because you're scaling and like month end is getting more complicated. I think a rule of thumb is like whenever you pass that 100K per year of revenue, like you're likely getting to a point where you're scaling or growing and more complexity is happening. So you need someone by your side that can be an advisor to you. If there are multiple revenue streams or multiple contractors, we want to make sure that we're paying out those 1099, or that we're providing those contractors with those 1099s before the deadline, right? Because there are penalties come tax season for every 1099 that was not filed or shared with a 1099 contractor. So those complexities are where a CPA or someone can help you truly understand, like even setting up a calendar of like when certain tax documents should be provided um, to individuals. Even thinking about W-2s, there's a deadline for that, and usually towards the end of February, right? Where you need to submit those W-2s to IRS. You need to also submit those to said employee, and they need to match, right? Because that is how the IRS looks at those W-2s, and when the individual files their returns, if those two don't match, then we have a problem where we likely need to correct those and reissue those W-2s. And the last thing that we want is like taxes are a domino effect. So like we don't want to be in a position where someone's filed their tax return on a personal side, and then now we have to go back to them and say, actually, you need to amend that return, right? Uh, you know, I, I think a lot of times that's where maybe some employees start to get upset, right? Because now they're spending more money because they have to amend a return that they thought was correct. If you have grant funding or government work or nonprofit reporting, like these are highly scrutinized, and you likely should have someone, an advisor that has experience working with nonprofits that can provide you with the proper documentation and reporting of the grant funding or nonprofit reporting. And then lastly, like growing teams, if you have a partnership, partnerships can be very complex because ownership can be different across different partners. There could be special allocations of profits or losses. Maybe there's P units in it, profit units, where they don't have like capital units within the partnership. And then obviously S corps, right? So maybe you've elected S corp status, and now you're playing the FICA game. Like it's very important when you start to move into some of these more strategic moves of how you are legally structured. This is the time where you want an advisor to be able to help you. So I want you to ask yourself a couple of things. The first thing I want you to ask yourself is, do I know how much I owe in taxes this year? If you are saying no to this, then you likely need to do some tax planning. Am I prepared to pay quarterly taxes? If you're not prepared to pay quarterly taxes, that means you likely have not been putting aside the amount of money that you need into that tax account to be proactive, to be able to pay those. Do I have a tax account? If you don't have a tax account, I encourage you to set one up, right? We want to uh, delegate the funds to the correct accounts and be able to structure things in a way that we have complete visibility so we're not hit with some of these surprises. And then the last thing is, do I have a CPA or am I winging it? I actually have met with some people over the years where they've come to me and said, "Hey, man, like I got this partnership and like we're growing really fast. And last year we did our own taxes, but I have no clue if they're correct, right?" Like, how do we alleviate that? How do we? And I know it's a cost to have an advisor, but I will tell you that it's more costly to have to refile or to pay interest and penalties because we did something incorrectly, or maybe we didn't even file at all, right? Um, at the end of the day, it's so important to make sure that we're following on time. So even if you are doing it yourself, it's better for you to do it yourself and then not to file at all, because at the end of the day, that at least helps you avoid interest and penalties. And then at the end of the day, you can find an advisor that can help you amend those if there are things that are incorrect. So to close today, fitness isn't about avoiding taxes. It's never been. It's about not being surprised by them, right? So I'll say that one more time. Tax fitness isn't about avoiding taxes. It's about never being surprised by them. So we want to make sure that we can alleviate any surprises as much as possible. You know, and I think as you think about your tax strategy going into this next season, I would encourage you to think about, did I accomplish the things that I wanted when we talked about this subject last year? And if the answer is no, I encourage you to take December to really start to implement and put some of these things in place, so we can be stronger for 2026. So with that being said, tax season's right around the corner. What a lot of my clients are doing today, they're working on planning and working with a tax advisor that can help them with planning. If that's not you, I encourage you to think about that. And if you have questions, like, there's many different resources. I know some people are probably using H&R Block, some people are using TurboTax and doing them on their own. And what I'll say is, like, that's okay. And there are better ways to do it if you can afford it, right? So you have to also think about your budget and what's affordable and what makes sense for your business. So as I always say, the reality is it's not how much money you make, the power is in how much money you keep. I really appreciate you all tuning in today. Thank you so much. I'm your host, Andre Creighton, and I look forward to seeing you all in the next episode of Financially Fit. Have a wonderful day.
I drew you this year.
Oh, I love scratch games. Thank you, Mark.
You're welcome, Tabitha.
They're so sparkly.
Festive, right?
You know it's a good gift when it's hard to let it go.
Kinda wish I drew myself.
Kinda glad you didn't.
Holiday scratch games from the Minnesota Lottery are great to give and even better to get.
So thoughtful.
I know.
Ready to go? At Metro Transit, we are. With more routes to more places, easy ways to pay, and more convenient options, we're ready to go further. Go easier. Go faster. Go, go, go.
And go.
We're ready to go. Are you?
Okay, So you wanted to apply for that Promise Act grant for your business when it first came out, right? But you didn't have your stuff together, so you did not qualify. Well, today is your lucky day, honey, because round 2 is happening right now, and there is $60 million up for grabs for entrepreneurs in Greater Minnesota, parts of Minneapolis, and St. Paul. But here's some of the things that you got to have before you can apply. Now, you gotta be registered with the Minnesota Secretary of State, generate less than $750,000 in annual revenue, and you got to have your 2024 taxes filed. More of that eligibility criteria can be found at mnpromiseact.org. So go online and get ready so you can go out there and get this money. The deadline to apply is December 14th.